Good morning, children. Welcome to Commerce Online class. Children, in the last class, we have discussed about capital market. In this class, we are going to see about money market. Children, what is market? Market is a place where we will buy and sell goods. Market means it's a place where purely for short-term funds. It deals with financial assets and securities whose maturity period does not exceed 1 year. So the maturity period should not exceed 1 year and is a place where they will deal with financial assets and securities. According to Grother, the money market is a collective name given to the various firms and institutions that deal in the various grades of near money. Now we will see the characteristics of money market. So first one is short-term funds. Money market deals only with short-term funds or financial assets called near money. And second one is maturity period. The maturity period is up to 1 year only. In money market, the maturity period is only up to 1 year. Conversion of cash. So in money market, it deals only with those assets which can be converted into cash readily, without loss and with minimum transaction cost. And there is no formal place in money market. So generally, transactions takes place through phone, that is oral communication. So in case of any relevant documents and written communications can be exchanged subsequently. So there is no formal place in money market as like in case of stock exchange in the capital market. So in money market there is no formal place. So this money market has got many sub-markets. It is not a single homogeneous market. So there are several sub-markets, each specialized on a particular type of financing. For example, call money market, acceptance market, bill market. Now we will see the role of market. Central bank, commercial banks, non-banking financial company, discount houses and acceptance house, commercial banks, they play a dominant role or an important role in the market. And this money market is highly organized banking system. So the commercial bank is the nerve system of the whole money market. Their main aim is to provide short-term funds. So it provides a link between the central bank and the various segments of money market. And there is an existence of secondary market for these instruments. Demand and supply of funds. There is a large demand and supply of short-term funds. So because of this, there is an existence of large domestic and foreign trade. The money market is a wholesale market because the volume of funds or financial assets traded in the market is very large and it is flexible. So due to this greater flexibility in the regulatory framework, there are constant endeavors for introducing new instruments. So money market is flexible. Because of the flexibility, they are able to introduce new instruments in the money market. And then the presence of a central bank. The central bank keep their cash reserves and provide them financial accommodations in difficulties by discounting their eligible securities. So through its open market operations, the central bank absorbs surplus cash during off seasons and provides additional liquidity in the busy seasons. So the open market operations in the central market absorbs surplus cash during off season and provides additional liquidity in the busy season. Now we will see the difference between money market and capital market. First one is duration of funds. So the money market, it provides only short-term funds and the period of not exceeding 1 year. Capital market, it provides long-term funds where the period exceeds more than 1 year. So money market, the period is up to 1 year, and capital market, the period extends more than 1 year. Supply of funds. So this money market, it provides funds for financing current business operations, and for the industries, for the working capital requirements, it provides funds, and for the government, it provides short-term funds. But capital market, it provides fixed capital requirements for trade and commerce and large term requirements for the government. And next, deals with instruments. Money market deals with instruments like commercial bills, bills of exchange, treasury bills, commercial papers, etc. Whereas capital market, it deals with shares and debentures, government bonds, etc. Now we will see the money value. In money market, the value of each single instrument is very large amount. A treasury bill is of minimum for 1 lakh, and each certificate of deposit or commercial paper, the minimum value is rupees 25 lakh. But in capital market, it is of very small amount. So the value of share is rupees 10 and the value of debenture is rupees 100. Role of major institutions. In money market, the central bank and commercial bank are the major institutions. They play an important role in money market. In capital market, development banks and insurance company, they play an important role in the capital market. Availability of instruments. So money market instruments, they do not have generally secondary market. So money market instruments do not have secondary market. But capital market instruments, generally they have secondary markets. Subdivision. In money market, there is no such subdivision, but in capital market, there is subdivision. So it is primary market and secondary market. So capital market is divided into primary market and secondary market. Now, place of transactions. In money market, the transaction mostly take place over the phone, and there is no formal place in money market. So all the transactions, mostly it will be taken place only through oral communication. But in capital market, transactions takes place at a formal place. So that place, for example, it is called a stock exchange. So all the transactions will be done in a formal place. It is called as stock exchange. Now we will see the participants in money market. So in money market, the transactions have to be conducted without the help of the brokers. That is the bankers, Reserve Bank of India and government. But in capital market, transactions have to be conducted only through brokers. So let us see who are all the brokers who are involved in the capital market. They are the investors, merchant brokers, underwriters and commercial banks. Number of instruments dealt in capital market. So it includes interbank call money, notice money up to 14 days, short-term deposits up to 3 months, and treasury bills up to 91 days, and treasury bills up to 182 days, and commercial papers. But the number of instruments in capital market is only shares and debentures. Next one is claims. So money market deals with financial claims, assets and securities. Whereas capital market, it deals with bonds and shares. Risk. In money market, it is low. So low credit and market risk. Whereas in capital market, it is high. Risk is high. High credit and market risk. Liquidity. In money market, high liquidity. In capital market, low liquidity. In money market, no price discovery mechanism exists in the market. Whereas in capital market, price discovery mechanism exists. In money market, the regulators are central bank. So central bank is the regulator of money market. In capital market, besides central bank, certain special regulatory authority like SEBI, they will interfere and regulates the capital market. Next one is underwriting. Underwriting is not a primary function in money market, but it is a primary function in capital market. So in money market, commercial bank is the dominant institution. In capital market, non-banking financial companies and special financial institutions plays a dominant role in capital market. Children, now let us see some of the terms that are used in the money market. The first one is near money. So what is near money? Assets which can be easily convertible into cash are called as near money. For example, these assets include savings account, certificates of deposit, foreign currencies, money market accounts, marketable securities, treasury bills. So the assets which can be easily convertible into cash are called as near money. The next one is call money market. Call money is minimum 5% short-term finance repayable on demand with a maturity period of 1 to 14 days. The money that is lent for 1 day in the market is known as call money. And if it exceeds more than 1 day, it is called as notice money. Next one is acceptance market. An acceptance market is based on short-term credit instruments. Typically, it is used by exporters who prefer to get paid faster for their exported goods. The next one is bill market. Bill market refers to the market for short-term bills, generally of 3 months maturity. A bill is a promise to pay a specified amount by the borrower to the creditor. Children, do you know what is central bank? Central bank is a national bank that provides financial and banking services for its country, government and commercial banking system, as well as implementing the government monetary policy and issuing currency. What is commercial bank? Commercial bank is a type of financial institutions that accepts deposits, offers checking account services, makes various loans and offer basic financial products like certificates of deposits and saving accounts to individuals and small business. What is bill of exchange? Bill of exchange is a written order used primarily in international trade that binds one party to pay a fixed sum of money to another party on demand or at a predetermined date. What is treasury bill? Treasury bills are money market instruments issued by the Government of India as a promissory note with guaranteed repayment at a later date. Funds collected through such tools are typically used to meet short-term requirements of the government. London Money Market. London Money Market is a collection of markets where short-term assets are traded. London Money Market is the oldest, most developed and lending money market in the world. New York Money Market is ranked as the second well-developed money market in the world, next only to the London Money Market. Children, these are your homework questions. You have to learn and write it in your commerce classwork. The first question is, what are the features of treasury bills? Who are the participants of money market? Explain the types of treasury bills. What are the features of certificate of deposit? What are the types of commercial bill? Money market is a market for purely short-term funds. It deals with the financial assets and securities whose maturity period does not exceed 1 year. Examples: treasury bills, commercial bills, certificate of deposits, government securities, etc. Thank you, children. Have a nice day.